breaking news, breaking news. We just got word that the White House and Congress have reached an agreement on a budget and suspension of the debt ceiling for 2 years. I'm going to talk about that first. Let me make an announcement. It is Monday, July 22nd, and because it is Monday, you should know I sent out the new issue of MMT Trader. If you want to get that, please go to my website, pitbulleconomics.com, and sign up for a 30-day free trial for MMT Trader. So this is what we have been waiting for. As you know, I have been reporting and making these videos now for a number of months, talking about how the debt ceiling has imposed this sort of drag on the markets, this very cyclical volatility, 1 month up, 1 month down, as these reserve balances build up and then get sucked back down as a consequence of government spending and tax collection. There had been no means since early March for these reserve balances to maintain sort of a steady level because the Treasury was not able to sell bonds. Now that is going to be lifted. The debt ceiling will be suspended. The normal reserve drain activity will occur. You will see Treasury keeping its balance up around $300 billion in its account at the Fed. That's historically been the level that it's, like to hold it at. And so we should be able to do away with this back and forth volatility monthly. Now, as you know, despite the fact that we have had these volatile swings in the market has been going higher, and that is a testament to the underlying strength of the market. There is also another thing that is going to happen now, because I spoke about the big bond rally and the decline in yields, which went way beyond what was justified by Fed policy, by monetary policy. Remember, the funds rate is still at 2.5%. We got down below 2% recently, and we're close to it on the 10-year yield. We had all kind of inversions in the yield curve. A lot of people saying, oh, that's a recession predictor. I was telling you that it's all related to the debt ceiling and the Fed's guiding reserves lower. It created a squeeze in the Treasury market. There wasn't any new bond sales, and the story I've been talking about. That goes away. That goes away. So the rally in the bond market that we have seen since March. Now, prior to March, I do admit that bonds were rallying, but that's because the Fed in January said they were done raising interest rates. So we had a natural reaction to that, where we went from over 3% on the 10-year down to around 2.5%, maybe slightly below. But then early March, when that debt ceiling hit, we went way down to 2%, even below that. That squeeze is over now. The Treasury will resume selling bonds. New supply will hit the market. You are not going to have that condition that existed before. So this is good news. In addition to lifting the debt ceiling, suspending the debt ceiling, there was they increased discretionary spending by another $50 billion. Big increases to veterans benefits. So we are going to see that, and that was necessary because the fiscal year 2020 budget had automatic spending cuts built in. They did away with that. Permanently did away with the sequester. Those were those automatic spending cuts. So that is a very positive development that I was hoping to see, and I'm glad that they went ahead and did that. So right now, the picture looks, I think, extremely positive. And of course, next week we will get the Fed rate cut. Now, some people are still saying we're not going to get a Fed rate cut. I think, and I have expressed my opinion on this, and I think it seems to me pretty obvious from listening to Powell, that he is a creature of the market. He follows the market. He really doesn't understand his role as price setter, monopolist at the central bank. He looks at the market. And a lot of these other guys on the FOMC, I don't know, they all seem to be auditioning for the part of Fed chairman if Trump ever gets rid of Powell, because they're all saying we need cuts, we need cuts, we need cuts. There is nothing in the economy, at least in the economic data, that would suggest we need cuts. I mean, look at the employment rate. Look at the unemployment rate. Was it 3.6% or 3.7%? It's extremely low by any historical measure. And that's usually the metric by which the Fed decides whether or not it needs to ease monetary policy. So in any normal situation with a 3.6 or 3.7% unemployment rate, you're not going to see the Fed say it needs to cut rates. So I think he's really, and he's being pressured by Trump, but he's also just saying what the market is screaming for him to do, or he's going to do what the market is screaming for him to do. Now, who says the market is right? But anyway, that is my call, that he will cut rates. But I think that sets up a very important top in the bond market. I think actually this lifting of the debt ceiling sets up a very important top in the bond market. You might have to wait until next week for that rate cut. So all the zombies are going to rush in there. What are they going to do? They're going to rush in there. They're going to buy bonds, and that gives you the perfect setup for a reversal in that trend. Important implications for other markets as well. Gold, for example. You're going to have to get my report to see what I have to say on that. The dollar, for example, you're going to have to get my report to see what I have to say on that. So go to my website, pitbulleconomics.com, and sign up for a 30-day free trial for MMT Trader. Let's talk a little bit about oil. We're still probably going to see the effects of Hurricane Barry in the weekly data. That's the API inventories and the EIA weekly petroleum status report. That affected the reports last week when we saw a minimal drawdown in crude. We saw a big drop in exports, both in crude and petroleum products. We saw a build in gasoline inventories, a very big build in distillate inventories. Those results were partially or maybe completely influenced by Hurricane Barry that shut down a lot of producing areas, cut demand in certain places. So we may have another week of that, and you know what that means. The zombies are going to see those numbers and they're going to be selling oil. But that sets up another good buy opportunity, I think, in the oil markets, because later on this year we will be higher. Anyway, a lot more stuff. The banking data in my report as usual. Fed balance sheet, all right. The fiscal flows all broken down as I do every single week. There's only one place you could get that information. Remember, the data that I follow is real time. We're not looking at stuff. I don't even put these government released data that comes out looking 30 days behind or a quarter backward. No, that has no impact on the type of analysis that I do. Everything is real time and forward looking. You're not going to get that anywhere else. pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. See everybody tomorrow. Bye-bye.